Good afternoon. Welcome to the marketplace. Coming up this afternoon, Economist Intelligence Unit projects marginal depreciation of the cedi in 2025. Meanwhile, the cedi weakens marginally on the retail market due to stronger dollar, as $1 is going for 16 cedis 10 pesos. Also coming up, policy rate to fall to 22.5% in 2025. We hear from professional services firm Deloitte, as this will come as good news for businesses. And this Christmas, many will be heading to tourist destinations for festivities. We'll find out how the tourism sector is preparing to receive patrons. That's on the exchange. My name is Darryl Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. Now, professional services firm Deloitte is predicting a persistent reduction in interest rates in 2025 on the back of sustained disinflationary trend. It is thus forecasting an end-year policy rate of 22.5% in 2025. There's more in this report. The reduction in interest rates will come as a huge relief for households and businesses as cost of borrowing will fall significantly. The Bank of Ghana cut its benchmark interest rate twice in 2024 by a cumulative 300 basis points to close the year at 27%. The return to a neutral monetary policy stance, Deloitte said, is the beginning of an accommodative posture and was driven by the decline in inflation that occurred for almost half of the year. On implications and risks, it said an expansionary policy stance is positive for the overall Ghanaian economy as more credit is available for business expansion and consumer spending pickups. Also, the risk of bad debt in the books of banks would reduce, adding there are short-term risks to the accommodative policy outlook, and these include supply chain disruptions, exacerbating the high inflation environment, and a resurgence in cedi volatility. In November 2024, the Monetary Policy Committee of the Bank of Ghana maintained the policy rate at 27%, citing elevated inflation. Well, meanwhile, the Economist Intelligence Unit is estimating that the cedi will end 2024 at 16 cedis 7 pesos to the US dollar. Now, it is also projecting a marginal depreciation of the local currency in 2025 to 17 cedis 23 pesos to the American greenback. This was captured in Deloitte's report titled Sneak Preview of 2025. Meanwhile, let's talk a bit more about the cedi's performance. The cedi weakened against the dollar and the major foreign currencies last week, primarily due to the strengthening of the US dollar. This follows the Federal Reserve of the USA's 0.25% rate cut. Consequently, the cedi depreciated by 0.95% week on week versus the dollar. Now, this is despite the Bank of Ghana's increased injection of about $213 million into the domestic foreign exchange market. The local unit closed the week trading around 16 cedis 10 pesos to the dollar. Now, analysts believe the cedi may extend its weakening in the near term following the strengthening of the US dollar. However, the local unit is expected to remain relatively stable this week as the Bank of Ghana continues to intervene in the forex market. Well, to talk a bit more about this, I'm joined on Zoom by macroeconomic research manager at GCB Bank PLC, Courage Boutique. Good afternoon to you. Thank you for joining us as we look into 2025. So the EIU projecting a marginal depreciation of the cedi to 17 cedis 23 pesos in 2025, citing an anticipated decline in cocoa exports and a rise in imports. What do you see?
Good afternoon to you and your listeners. Broadly aligned, except I would stop short of quoting a figure. I would rather give a direction. I think the cedi will continue probably on a path of some depreciation, but at a marginal rate than we have seen in recent years. And I think the driving factors of that slowdown in depreciation will largely be the improving sentiment of the market. We're seeing the macros recovering. We're seeing GDP numbers turning positive or showing positive signs. We're seeing inflation receding. We've seen, most importantly, the external reserve and buffers kind of improving, supported by the domestic gold purchase program and a number of other initiatives. Yes, we may have resumed external debt service, but it appears that the interest negotiations, and if we do our things well, we prepare ourselves well. Some of the savings that came along the way should help us, in the interim, manage the external debt service without much consequence to the reserve buffers and all that. So on that score, yes, the usual pressures are there. Growth is recovering quite strongly. It means that those sectors that are dependent on imported inputs and all of that will ramp up imports, and you see the bills shoot up and all that. But ultimately, that should generate enough productivity locally and also reduce the importation of some of the things that otherwise would have been produced locally. So I think the balance of things will show that a relative stability relative to the last few years, but not as I was still short of putting a particular rate to it by end of the year.
How that impact inflation? So, for instance, Deloitte in a sneak peek of 2025 talks about or projects that inflation will reach 11.9% probably towards the end of next year. Do you see this disinflationary trend in 2025?
Well, yes, broadly, I see this inflation trend continuing through 2025. It hasn't been as much this year. In fact, on the net, year to date, just about 0.2% disinflation. We know the reasons why, and probably the next print would also show further uptick. Even through quarter 1, 2024, we might see some upticks. But ultimately, I think from quarter 2 going, I expect that disinflation pulse to strengthen. And ultimately, I see inflation receding to around the 15% levels by end of year, which is, I think, higher than what the Bank of Ghana and many other institutions may be predicting. But I honestly think that from my module and from the assumptions and simulations behind it, I still see some inflation pressures coming in a bit stronger than they were in coming stronger than people would assume it will be. And I think the main drivers again will be on the food side, because we are weather dependent. We are dealing with now shocks of a drought, or if you like, near drought situation in the north. We do not know where the weather holds for us going into next year. Prices are largely sticky, and I do not expect that all the tax reforms, especially at the ports, that are promised by the government in waiting, there is scope for its immediate execution, given the fiscal consequences it may have. And so not much will change on the push factors that would drastically shrink inflation to the levels we expect. So I still expect that, yes, there will be a bit of mild pressure. We will see decline to about the 15% levels, but not the single-digit target that the Bank of Ghana has by end of the year.
And with these in mind, do you see the policy rate easing as well? Deloitte projecting 22.5 probably towards the end of next year. And then you know what that means for interest rates and for businesses as well.
Oh, yes, definitely. Well, once inflation is receding and the path, the outlook appears much clearer, yes, there should be scope for monetary easing. I don't think the Bank of Ghana will be in a hurry to cut the policy rate because, one, if it is about support for growth, I think growth is robust. You look at the quarter 3 numbers, quarter 2 numbers so far this year, and you realize there's a strong growth. Nothing across not just one sector, but 3 sectors. If you strip it off the oil output, you see it even more robust. And so I think it's quite broad-based, and monetary policy wouldn't have to do much to stimulate growth. I think the growth is also largely driven by the private sector. Yes, the infrastructural spare due to the elections would have gone off. And so you see maybe marginal slowdowns in areas like construction and public services and all of that. But then I think broadly growth will be around the trend growth of 5% that we see, which will mean Bank of Ghana wouldn't have to do much to stimulate it. But then if inflation recedes sufficiently and the risk points down, and doesn't pose immediate risk, yes, they should react with some policy rate cuts to ease lending conditions in the market and reduce the NPL levels and improve the operating environment for banks and all of that to do their business. I see if inflation ends around 15%, we could see from the 27% levels now, a policy rate reduced to about 22% levels, 21, 22% levels by end of year.
How quickly do you think banks would be willing to, reduce interest rates, taking into consideration non-performing loans and how high they have been?
It will be gradual, in my view. I don't think bank will still be very aggressive on lending because the macro conditions are now correcting, and there are still risk factors, concerns across the industry, concerns around what government is going to do with coupon payments as they fall due in 2027, 2028, particularly in COPE. And so the caution will be that you do not want to create assets that could easily be affected by the economic dynamics should things turn south again. So it will be a bit more caution, and that will mean that rate will also probably recede steadily, gradually, and will reflect the movement in inflation and policy rate along the way. Where there are risk factors, where they sense risk, so probably banks will be targeted in the sectors they expose themselves to, sectors that are not very vulnerable, and sectors that are not too exposed to government in the meantime until confidence is reasonably restored in the market.
All right, Courage Boti, looking into the crystal ball for us as we slowly approach 2025. How are you spending Christmas, Courage?
Yeah, family time.
Okay.
Share time. It's been a busy year, so spend some time with family. Build some memories and come back and keep firing again. And I wish you and your listeners, everybody, a Merry Christmas and a prosperous New Year ahead.
Many happy returns. I appreciate your time with us and all your input this year.
My pleasure.
Courage Boti.
All right.
Thank you. Manager, Macroeconomic Research at GCB Bank PLC. I appreciate your time. Now, Chief Executive of the State Interest and Governance Authority, SIGA, John Boadu, has urged the John Mahama government to pay critical attention to the operations of the authority. According to Mr. Boadu, SIGA has a significant role to play in growing the economy through mobilization of public funds. He was speaking to journalists at the launch of the SIGA Entities Portal.
Important that government looks at SIGA as one of the most important, if not, it should be the first appointment they should make. I think that is important that we've established these staffs here. None of them are here because of their political whatever. They are qualified people in their own right, and I will least expect that any disturbance in terms of transfers and all that will happen. If not, the entire entity will come down. For me, I supervise and make sure that they do their work, and so just being out does not mean anything. You can get somebody who will place SIGA at where it belongs to, and if it is done and done very well, in the whole of Africa, just about 2-3 countries that have the kind of SIGA arrangement that we have. Singapore, for instance, developed their kind of SIGA arrangement in 1971. 1971. That will tell you the kind of successes they've chalked over the years. Their SIGA, that is called Temasek, hold assets to the tune of $800 billion.
Now, the Chamber of Oil Marketing Companies has expressed worry about the inability of the National Petroleum Authority, NPA, to revoke licenses of oil marketing companies that have been dormant despite having operating licenses. The Chamber is therefore calling on the regulator to revoke the licenses and close down the dormant stations dotted across the country. Dr. Everson Opong is Chief Executive.
It is not easy, and nobody can convince me that any oil marketing company can break even with 7 stations, which is the standard of MPA. If I come with 7 stations and I register myself as OMC, nobody can convince me that I'll fold up. Yes, so companies have folded up, but new ones have come actively, inactively, whatever way, there are still new ones coming. Whatever purpose that they have, we are here to see. But I believe, as I asked His Excellency Mahama, I hope that he will allude to his promise and have a word with us that the number of oil marketing companies are too many. You know, when you build a house, there are too many. When you build a house to host, or a school to school 100 people, and within 3 years you have 1,000 people in the school, I don't think your amenities or your statutory assets will be capable taking care of the 1,000 people that you have. Engaged. You know, the issue needs to be addressed. The number for me is too many, and many of them are not working. There are several OMCs who have not even lifted 1 liter of this year. So why are they even keeping the license? I mean, where in this world, tell me which country an OMC can hold a license a whole year without lifting? Tell me, which country? Even Togo, you cannot do that.
All right, you're watching The Marketplace. We are taking a short break. When we come back, The Exchange, we'll be speaking with President of the Africa Tourism Research Network on Christmas festivities. Don't go anywhere. And well, typically on Christmas Eve, there are lots of people making their way to various tourist destinations to celebrate Christmas. Well, Emmanuel Frimpong is president of the Africa Tourism Network Research Network. He joins me on Zoom to talk about this. Good afternoon to you. Yesterday, I spoke with the president of the Ghana Hotels Association, and he was optimistic about patronage this festive season. How is it looking like so far for the tourism sector? Oh, unfortunately, I'm told we've lost Emmanuel Frimpong there. Let's do some more stories. Casona Global Imaging Limited has announced its readiness to partner with the government in the coming year to provide the public health sector with vital logistics and equipment. We'll delve into that story in a bit, but I'm joined once again by Emmanuel Frimpong, who is president of the Africa Tourism Research Network. Good afternoon to you. How's it looking like for the tourism sector this festive season?
Good afternoon, Darrell, and Merry Christmas to you and your cherished viewers. Well, so far, so good, even though the numbers, as we've seen already, is far lower than what we expected, but also it's understandable because of the election year. Usually, tourists are a bit skeptical when there's an election. People want to see what happens. So obviously those who would have booked their travels 6 months before time, they would want to wait to see what happens after the election. And obviously, if you also wait too much, ticket also goes up. Accommodation reservations also goes up. So obviously that could be the major reason. But so far, so good.
Yeah, we are not seeing anything like the year of return, are we? So where exactly are people going this festive season?
Well, there's still the year of return, but I must say is a bit slower than the previous years because obviously of the elections, and then also if you look at the political appointment, those who were supposed to lead the marketing, most of them were also involved in campaigning as well. So most of the regions, as we saw the previous years, were not too keen about the year of return and the events. So most of the events this year is centered around Accra and a few in Kumasi and Takoradi and Winneba. But as we saw last year, which was more spread than this year we are not seeing that.
Yeah, and I'm sure during this time, people will be looking at their pockets as well, which is affordable. Where can they go? And so, I mean, what do you suggest for our audience? What can they do during these times? Where can they go? Cheap places to visit? I mean, I don't know.
Well, it depends on what you are looking for. But around this time, families prefer to be together. So you can go to Winneba. They have masquerading events there that is interesting. Takoradi, Cape Coast. Keita, which is where I'm looking at going with my family. We'll be going to Keita. And also Accra usually choke around this time. So maybe you go beyond Accra, you can go to Koforidua. There are quite a number of things that families can enjoy. You can also create your own haven somewhere and just have a family fun. So I think people should not think of spending too much. You don't have to go too far. You can go to a resort around just Accra here or go a little beyond and try. Before you go, you prepare your own family food and you go instead of going to buy food, which will be quite expensive. You want to save for January, which is usually hot for everyone. So you can have something around for a family get-together.
All right. I think I may have misspoken. I should have said affordable and not cheap places to go to. Anyway, thank you so much, Emmanuel Frimpong. I appreciate your time. We'll make time have a longer conversation. President, Africa Tourism Research Network. Good to see you anyways, and Merry Christmas to you. All right, and that's our program, everyone. There is more news on our website, myjoyonline.com/business. More on the story concerning the dollar as projected by the cedi, rather, as projected by the EIU on our website, myjoyonline.com/business. And as well, Deloitte projecting the policy rate to end the year 22.5% in 2025. myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We will see you sometime soon.